Welcome back to the NITE Economics YouTube channel, and today we're gonna have a bird's eye view of what's going on in the markets. So let's start here with Bitcoin. We haven't really talked about this one so far because it's not that interesting right now. But Bitcoin this yesterday it closed above, and it's been doing this for a couple of days now. Closed above both the 21 and the 5 exponential moving average on the daily. As you can see yesterday, it got rejected exactly at the 55 exponential moving average. But we'll see. I mean, this is not looking bad right now. Looks like it could possibly get a little bit higher, possibly retest this previous high here of what was that? More or less just below 80,000 bucks. I do think that we still have more downside to go, but yeah, I mean, as you could see, it's building up something similar to this, where it started going into a bit of an uptrend, and maybe it goes into the uptrend until sometime in April, early April, and then it reverses back down to lower numbers because that's pretty much been my base case, that until Bitcoin doesn't really reach on the weekly, the 200 weekly simple moving average, I'm still gonna hold off from this bear market essentially turning back to the upside. I think we will see the 200 simple moving average on the weekly being hit at some point, and possibly even lower, maybe even this to the 377 exponential moving average, but only time will tell. I think in the short term, we're still gonna see a bias to the upside, but I don't really see it getting much higher than about 80,000 bucks. But we'll take it one step at a time. Here, when we look at the price of Bitcoin priced in gold, you could see that it's starting to create like a local low here. Might not be necessarily the low for this cycle, but as you can see, Bitcoin has been in a downtrend since December 2024 when you price it in gold. So it might even retest these lower numbers here. That kind of really depends on what gold does, because if gold starts to break out some more, which that is my base case, I do think gold is not done yet. It's just consolidating right now, and it will create a higher high, and possibly, well, it'll like, not possibly, I think it'll very likely be in Q2, maybe even as late as Q3, especially as fear, uncertainty, and doubt keeps creeping into the markets based off of lots of factors, and one big one being the war, and the war causing massive amounts of inflation and increasing inflation expectations, because oil is all of a sudden going to be more expensive because 20% of the oil's supply has been cut through the Strait of Hormuz. So we'll see how that plays out, but that could be a bullish signal for gold, which likely will be. So that's why my base case is that gold isn't done yet. Gold will continue to rally into Q2, possibly Q3, and maybe even by the end of this year. I know it's very difficult to say 100% what the time frame will be, but that's why on this channel, I like to take this thing one step at a time before I make an absolute um, date of when these prices are going to be seen. But for me, my base case is that gold is still going to rally higher this year. Um, yeah, so this is our friend. This is the gold charts. So to me, this is still bullish. Yeah, it's a short consolidation here, but it's still in an uptrend. And really, it would need to really, if it got below this number here from this last. Let me see if I could zoom this in a bit more. It's a little bit small here. So this low here of 4,841, as long as gold is above that, I'm not too concerned. If it does get below that, then, and especially if it gets below this low, then okay, then I'm gonna change my tune about gold creating new all-time highs later this year. But as long as gold is above that, I'm not too concerned. It closed this week below the 5 exponential moving average, and we haven't seen that since here, essentially. Where was this here? This was the close at 430. Yeah, so it just closed just below that exponential moving average, and gold is literally just below that right now. Can it pop back up next week? I think it's very possible. And as long as gold stays above that exponential moving average, I'm not too concerned that it will even retest these numbers down here. And I'm not concerned about this right now. For me, it's just a consolidation sideways before gaining some more momentum up to the upside later on this year. And then also the S&P 500 here, as you can see, it's starting to break down even further, and that was my base case for the S&P 500 was that it was stalling out, and now we're seeing that play out. Not only did it stall out, it's starting to break down. It's right here on the 10-day. Maybe go to a 2-week. Here on the 2-week, it's just above the 21 exponential moving average. And I think also I mentioned about the silver cross happening a couple of days ago here. So that happened officially. Let's see, when was this cross? Yeah, so that happened officially on Monday, March 9th. And so now the S&P 500 is basing here on the 200 simple moving average here on the daily. But I think it wants to go lower. I think it's gonna go potentially a bit lower. Let's take a look. There was something I was looking at. Yeah, as long as it stays lower, there's a potential for here on the 2-day, and I think on the 5-day as well. No, the 5 days far away from it. From the 2-day, for having another silver cross happening here on the 2-day, as long as it stays in this lower region here. And yeah, and I think, yeah, so now we've had officially this week the cross from the red exponential moving average, the 5 exponential moving average, moving below the 21 exponential moving average. And when we have that, we normally have corrections down to the 55 exponential moving average, and many times below that. But at least we're gonna get at least to this number. So right now here on the weekly, price target of mine here is a $6,460 mark, and that's where the 55 exponential moving average is at. So you could see when that happened, we had a move down to the 55 exponential moving average. So when it happened here, moved to the 55. It happened here, moved to the 55, and it's likely, it could likely happen right at the beginning of this upcoming week, because we saw that happen. It happens really quickly, right? We saw that here as well. This was obviously a little bit of an outlier because this was a black swan, but we saw that here, boom, moved down to the it actually happened right before the cross, but then it happened again, right? So yeah, so you could see that here as well. You have a move down to the 21. So I'm expecting this move to happen, if not this upcoming week, the following week, and I can see that with a very high percentage of probability of that happening. I think it's very, very likely. And then potentially, we could see lower numbers depending on how things move from there. But that's all I have for this week. So we covered gold, we covered Bitcoin, we covered traditional markets. I now take a quick look actually at the price of oil. So the price of oil is still very high. It's pretty much sitting at $100 right now on the weekly here. So it closed. This is a funny looking candle, but we'll see where it opens up next week. The 10-day, it looks like it wants. To me, this thing has more upside to go, but it's really hard to really give any technical analysis because this is really based off of the war and just like a shock to the 20% of the world's supply. So obviously there's reserves of oil, but eventually that stuff will run out, especially if this if the Strait of Hormuz continues to be closed. But we'll see. Again, we'll play this day by day, but as of right now, sitting at $100, and to me, I think this thing has more upside to go. But yeah, we'll play it one day at a time, and that's it for today. Again, if you're liking the content, please subscribe to the channel. It's very helpful. Drop a like on the comment, and I'll see you guys tomorrow. Bye.